Good evening, everyone, and welcome. Only 3 times this year has the Dow Jones Industrial Average lost 300 points or more. Today made 4, and the losses were the steepest of the year in point terms. All 3 of the broad market barometers fell 2%, this just a day after the largest one-day advance of the year. The bottom line, volatility is back, and the pros say it's not going anywhere anytime soon, so get used to it. Crude crumbled, investors fretted about slowing global growth, and the European Central Bank Chief Mario Draghi, speaking in Washington, signaled his worries about deflation.
We are accountable to the European people for delivering price stability, which today means lifting inflation from its excessively low level. And we will do exactly that.
Here's a look at the damage on Wall Street today, and it was thorough. The Dow plunging 335 points, the Nasdaq off by 90, and the S&P 500 down 40. The energy sector was especially hard hit as domestic oil prices fell another $1.50, closing below $86 a barrel for the first time since December of 2012. Brent crude dropped below $90 for the first time in 2 years. Bob Pisani has our report.
The issues dogging the market are essentially the same as what's been dogging it for the last several days. There's a collision between concern over slowing growth in the rest of the world and the debate between when the Fed should be raising interest rates. Several specific issues today. First, a slowdown in Europe. German exports dropped almost 6% in August. That's the biggest drop since the financial crisis several years ago. The head of the European Central Bank, Mario Draghi, again reiterated that there could be no recovery in Europe without structural and economic reforms. But a lot of traders are increasingly doubtful that the European leadership will be able to enact those reforms and get Europe back on a growth track. Third, there's been the relentless drop in oil. Good news for the economy, but very tough news for people who own oil stocks. Big oil names like Exxon, Chevron, Total, BP are down 3 to 9% just this month alone. Finally, there's general concerns about the ability to control the spread of Ebola, particularly if it spreads to other parts of the world like Southeast Asia or even Central America. Finally, though, let's try to keep a little perspective. The U.S. is not in a recession. The U.S. economy, in fact, is growing. The drop in oil is good news for us, and the S&P 500 is only about 4% from its historic highs, which it hit only about 3 weeks ago. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.